What are some of the companies in the Nordics that you believe have the most unique moats in their business?
Well, I think let's start in Norway. I think it's kind of an underappreciated fact is Kongsberg Gruppen, which we all think about these days as a defense company, and rightly so. But keep in mind, defense is only half of the revenue base. The other part is the maritime part. And on the maritime part, so say, Kongsberg Gruppen this year will probably do about 50 billion NOK in revenue, about half that is on the maritime side. And on the maritime side, what I think is underappreciated and the moat in that part is the installed base. There's about 100,000 commercial vessels in the world. 34,000 vessels have one Kongsberg maritime product or more on that. So you have a huge installed base, present in 34 countries. So I think what the market kind of missed or keep on missing is that this the breadth and depth of the product offering on the maritime side, because you have automation control, dynamic positioning system. Basically everything for a vessel you can get, besides building it, obviously, you can get from Kongsberg, which creates a long-term client relationship, not least in terms of service and aftermarket, where you can have really high margins versus the new building side. And I think they bought Rolls-Royce, right? So they've taken out competitors over the years, consolidated the industry, and in many of those verticals we do mention, talk about being a DP systems and so on. They're of one or two. It's like a duopoly or oligopoly. That's the thing, right? First you want to look for a monopoly, and if it's not there, you want to look for duopoly, and then you want to look for the oligopoly. And in quite a few of the companies that we own in the fund, it's one of those, not necessarily a monopoly, because then you end up typically in utilities, which is natural monopoly, but if you do duopoly and oligopoly, you seem to be able to make super profit over an extended time and longer time than many people do think. So I think Kongsberg is underappreciated, and the other part, the defense side, we all know that these days. But keep in mind that even though the war and the terrible war in Ukraine should be over tomorrow, you would still have these programs on the JSM and the NSM side, the naval strikes missile side, that keeps on going, right, for years and years. And of course the big backdrop being the NATO defense spending. Of the 33 countries, only 23 are up at the 2%, even after all these years, right? So you have these secular drivers that's running behind in the company. And the company has increased the top line by 20% a year the last 5 years. Is that going to de-accelerate? You're going to go from 50 billion now up to 120 billion in 2033. So then you're looking at the CAGR of 12% only. But I think it's a good example of a company that looks expensive, traditional multiples, being a PE and so on. But again, if you appreciate how much they spend on R&D, not capitalizing it, and keeping those strong position and product offerings, I think it looks like a decent investment still.
Yeah, and back to your investment philosophy, I know we should not overgeneralize, but this is like when you find Kongsberg, you like the development for reasons explained. So is it fair to say that you envision that the fund should probably own that company for a long time? Or is it a point where, okay, share price now looks very expensive, let's sell a bit? Or how does that go into? No right answer there, but... No, but
let's giving a more extreme example. Which has been Nvidia, which we have owned over the last couple of years, right? And what happened there is that the PE multiple, or the earnings multiple, stayed basically the same, because earnings kept on growing at the same pace as the share price. So it's only been between 35 and 40 on a simple PE level all the time, despite the share price going ballistic. But now, so typically when that earnings decelerates, which happened the last couple of quarters, that's kind of one of the flags you're looking at. So it's still good earnings growth, but you're going from extremely good to less good, right? Which tends to be a kind of a difficult transition. And the other reason we sell is we're running a fund, so we need, from a risk perspective, not to have too much weight in one stock. So that would be the reasons to sell. And but besides that, we in the fund, we try to incorporate two things at the same time, both the momentum effect, what kind of risk premium are we catching? Well, the momentum part, because what seems to be happening is that the market is underappreciating good news. Kongsberg Gruppen can be a good example of that. Nvidia can be a good example of it. It keeps on going, right? And that's why both share price, but also earnings are autocorrelated. I mean, one good quarter, it tends to, in good companies, that tends to continue until something happens, right? But it's more likely that it continues for another quarter. So that's why we try to hang on to those kind of stocks as long as we can.
Yeah.
And it still represents value in the sense that, it's below intrinsic value, and it's not in an absurd pricing range.
Other interesting companies in Nordics?
Yeah, I think. I think on the capital return on capital side, I mean, I think one of the striking things is two Danish companies in the same industry, but with very different return characteristics. DSV, the sammenslutede vognmenn, the United Truckers, let's try to translate to English, and Maersk. So joking aside, I mean, it's a good example of if it floats or flies, you should probably lease it and not own it. And I think those two companies, the last 25 years, is a good example of that, because looking at the returns on DSV, which is a capital-light business model, done a lot of M&A, but stayed capital-light, a lot of cash generation, debt has not grown out of place. The stock has returned 20% a year over those 25 years, which is magically is the same as the earnings number, which is compounded at 20%, which magically also is the same as the return on capital in the business, versus Maersk, which has returned 6-7% a year. So point being, over 25 years, that compounding effect is enormous. So Maersk has only gone 300%, right, over that 25-year period. 300% sounds like a big number. But if you look at DSV, and it's gone 10,000% in the same 25 years. So Einstein he said it, right? I mean, compounding is the eighth wonder of the world. And I think being in the same industry, basically moving stuff, but with a very different business model, capital light versus capital heavy, over the long run, it shows the discrepancy between those two kind of business models. So we own the DSV, a great company, and this fall bought DB Schenker. So now the biggest freight forwarder in the world. So it's congrats to the Danes, great businessmen, and they seem to be able to continue that journey on a good cash flow basis.
And that's one story that is incredible, of course. And then it's hard to talk about Denmark without mentioning Novo as well, I guess.
Well, I think we need to touch on that. And then we were told you never mentioned the duopoly, and the funny, in lack of a better word, is that the same two companies, which for 100 years had dominated the insulin diabetes part, Eli Lilly in the United States, Novo Nordisk in the Nordics, dominated the insulin industry, seem to be the ones dominating the weight loss, which hopefully, knock on wood, is going to be the next, let's see if it's going to be 100 years, but when we meet next time, but 100 years of super returns on the weight loss side. And I think it comes to show that it's a combination of good owners, which I think is a key aspect. When you asked about a good stock, what is that? I mean, being a good stock often requires to have good owners. Good owners require long-term owners on the board that are active. You asked about passive versus active, but I think this is a great example of having active owners. There is a foundation, that's the main owner in Novo Nordisk, which has enabled the company and the management to take these long-term views. The Wegovy, for example, that's the weight loss medicine in sale today, started developing it almost 30 years ago. So these are huge, investments in long term. And if you don't have a board that allows the management to take these long-term value creation decision, it's very hard for the management to operate without that kind of good parenting, call it. So I think it's a great example of great ownership, great business culture, great products, and knock on wood, hopefully they will dominate those two will dominate the weight loss industry for the coming years.
Yeah. I know this is a very hard question to probably answer, but if we're talking about moat, then in Norway we have the salmon industry that is obviously well known worldwide. And then there's so many things we could discuss with tax, with land-based farming, but like salmon industry in Norway, do we define that as a very strong moat and we see good times ahead, or is that a more complicated one?
Well, I think turning back to the framework, Hamilton, the framework, 7 powers. So location, I would qualify that one of it's called cornered resources, right? It could be a patent or it can be a location, something that can't be taken when you've cornered it. And for some of the companies, SalMar in particular, they seem to have cornered some very good locations. I mean, the water quality is good, the temperature is fine on their location versus some of the other fish farming companies. So I think that's an example of an industry which has taken some of the best maybe from offshore, other related industries. I mean, this is a question: what are we going to do after the oil and all that? I mean, I think the answer is, among other things, it's the fish farming part of it. And looking at some of those companies that are best in class there, you're talking about great returns, right, on capital employed, SalMar in particular, and they've been able to grow as well. And you mentioned tax. I mean, the growth vertical that before this new tax change was this offshore part, which I think could have been a great growth area. Unfortunately, now it seems like that growth is going to happen in Scotland, Ireland, and in other locations, right, than the Nordics, because of that tax angle. So, we own SalMar, and it's one of those owner-operator companies that tends to do a bit better because you have Gustav Witzøe, which is, in his 70s, but still active. And that's, you again, turning back to what do you look for in a great company? And one of those things is either a good owner or an owner-operator, in the sense of Gustav Witzøe, in that which influence the culture and capital allocation part of the companies. So we're happy holders.